Success is not built on success. It's built on failure. It's built on frustration. Sometimes it's built on catastrophe. Navjot Singh Sidhu. My friends, every single day we ask you to spend 10 to 15 minutes with us figuring out how these markets work, and it doesn't cost you anything. In fact, we encourage you to practice trade so that those failures, those frustrations, those catastrophes are all virtual. They don't happen with your real money. You learn how to follow these charts so that you can make this market work for you. Let's start. Well, I'll tell you, everything is down for the day. This is a shortened week. Markets are closed on Friday for Christmas Eve. Now, let's talk about where we are. We see the S&P 500, NASDAQ 100 down over 1%. Bitcoin not down as much. Gold down about 0.5%. 20-year government bonds down 0.75%. Look how this week is starting off. Big red down candle. Again, we've talked about how this downward pressure has been on the market since we had that weekly vertical crossover back on the week ending the 3rd of December. This week is no different. Even though these two prior weeks were green spinning tops, they were still sideways slides within the range of that big down move on that week ending the 3rd of December. We see the derivative oscillator gaining downward momentum, price percent oscillator heading down. Go to the 2-day. We can see where the price percent oscillator hockey sticking over, going down. Derivative oscillator's been red this whole time, heading down also. So as we look, we can see again just these things accelerating. This latest candle has formed now, representing Friday and this Monday. So again, we see an acceleration in the down movement. Look at the half-day chart. We can see where things really hammered down in the morning, losing a little bit of that in the afternoon, but that derivative oscillator still oscillating down. Price percent oscillator still steeply going down. So we're starting this Christmas week off with lots of downward pressure. We go to the NASDAQ 100. It's down just a little bit more starting the week off. And again, after a sideways slide these last 2 weeks, a little more negativity there. We had solid green versus the open box green. So as we see this week starting, price percent oscillator heading down, derivative oscillator gaining downward momentum. We look at the 2-day, and of course 3 red down candles representing 6 days of down movement. Price percent oscillator accelerating, moving down, along with the derivative oscillator half day, like the S&P, down in the morning, recovering a little bit in the afternoon. Price percent oscillator, derivative oscillator likewise heading down. Let's move from stocks to bonds. As I said earlier, bonds down 0.75%. Now, bonds are still in the confirmed up move. We're still under that weekly vertical crossover going up that happened back in mid-November. Things slid sideways for 2 weeks following that, popped up a week, sort of diminished then, and as we see things, they continue to devolve. Still above the weekly trend line, sitting right there on the 2-day on this weekly chart. Price percent oscillator a little less than flat, derivative oscillator green, losing upward momentum. We look at the 2-day, didn't quite manage to cross over, going down, green spinning top, little bit of movement on the bottom again. We still have some upward pressure on bonds. We'll see if they bounce off that 2-day trend line and stay above the weekly, and if it'll bounce off this price percent oscillator. But that derivative oscillator has already gone quite negative, so that might not be occurring. Look at the half day. We can see where things had popped up, and in the morning, sort of some indecisiveness. Then we saw that down movement in the afternoon with that price percent oscillator pulling away from the red signal line. So again, there is some downward pressure on things overall in bonds, with that weekly vertical crossover still being up. We still see that there. So we'll watch. If that 2-day does cross over going down in the next couple of days, then of course all bets are off, and we'll continue to watch and see how this plays out. Now let's move on to gold. Gold down 0.42%. We see that we look at the weekly chart in gold, and it again is trying to cross over as the week starts going down. It is a green open box candle We saw this happen last week, and then it pulled back through. We'll see how things go this week. That derivative oscillator, though, is negative at this point. So we may have a weekly vertical crossover going down in gold. If it happens, it happens. It didn't happen this last week. We'll see how this week continues on. Like we said, down 0.42% for the day today. Still negative. Price percent oscillator is flat. Derivative oscillator losing downward momentum. But of course, a green open box 2-day candle has finished forming. The first green open box candle we have seen since just before the rollover occurred. That goes all the way back to the 18th of November. So that is where we are on the weekly and the 2-day. Half-day, we can see where things went up for a day and a half and now down for a day and a half. Price percent oscillator is still positive. Derivative oscillator is positive. So we'll continue to keep an eye on gold, just realizing we do have some real downward pressure on that weekly chart and may have a crossover going down by the end of the week, which will be ending early on Thursday. Let's go to Bitcoin. What's the news been on Bitcoin? Well, for the last now going on 3 weeks with that weekly vertical crossover, we have a lot of downward pressure. Price percent oscillator heading down, derivative oscillator heading down. Some people say, why is everything going down? Well, when you start having stocks really start to hammer down, what that causes people to do is it's called an unwinding. What can happen is people are getting margin calls. They're having to close positions and then sell off assets such as bonds, gold, and maybe even Bitcoin to cover those positions. So if we're having a real strong rollover, if that's what is being portended by these actions, then of course we'll see those things drag down for a while as long as it takes for those margins to clear. So again, we just have lots of downward pressure on pretty much the whole Bitcoin and crypto-related market. Ethereum also down for the day. We go to the 2-day chart. We can see, again, another red down candle reaching a little bit lower lows. Not a big candle, but still lower lows. Price percent oscillator heading down. Derivative oscillator negative, losing downward momentum. Lastly, we look at the half-day chart. We can see where Bitcoin moved down and then popped up in the morning and afternoon on Thursday of last week. And then after that, started its movement down again on Friday and Monday. But that price percent oscillator is still trying to stay positive, and that derivative oscillator is positive, losing downward momentum. That's where we are. Let's watch as this market continues to move on toward Christmas and toward the end of the year. Are stocks going to see some significant continued down movement? That may be what we're going to see here. We'll continue to watch every day. Thanks so much. We appreciate in particular our Patreon supporters for all you do for us. And we will continue to deliver each and every day. God bless and Merry Christmas.